politics and policy matter so much in this sector. As an investor, I used to say it was sort of 50% of the game. Having good regulatory relationships, if you're regulated, having a great policy, if that drives some of your income and your growth, these things, I think, can't be overstated. Certainly at certain periods in a life cycle, and if you're regulated, politics will always matter. And being a good corporate citizen and being good for stakeholders broadly, companies that have managed that really well, they are rewarded.
Hello and welcome to Energy Unplugged by Aurora. This podcast features various experts from Aurora having in-depth conversations with key industry leaders, policymakers and academics from all over the world. It explores the hottest topics across the energy market and gives a unique perspective on major energy issues.
Welcome to Energy Unplugged. I'm John Feddersen, co-founder and chief executive of Aurora, and my guest on the show today has seen the energy transition unfold over the past decade from the highest levels as an investor, an advisor, and as a board member. She is one of Europe's leading power and industrials investment bankers, currently a partner at PJT Partners and previously co-head of Morgan Stanley's Global Industrials Group in Europe. She's formerly a public markets investor and analyst with the Teachers Insurance and Annuity Association of American College Retirement Equities. It's a bit of a mouthful, but rightly so because they have over $1 trillion under management. So they're a major public markets investor. She's also currently a company director in the power and the oil and gas space, so non-executive at EDP, which is Portugal's leading utility, and at Enquest, which is an oil and gas company based out of the UK. She's also a prolific director and trustee outside the energy sector. She is a trustee of the American University in Cairo. She's a chair of the board of advisors for Georgetown Center of Contemporary Arab Studies, and she's also on the Tate Board of Trustees. She studied Arabic as an undergraduate. My guest on the show today is Laurie Fitch, current partner at PJT Partners. Welcome, Laurie.
Well, thank you, John, for that very warm welcome. I don't think I've ever heard anyone say out the entire words for TIAA craft.
Yeah. I had to practice it a little bit this morning, but I got there in the end. And you're in Cairo at the moment, as I understand. How are things there?
I am. Well, it's warm and sunny. It's about 25 degrees today, and having spent every day for the last month in London I think I saw the sun for about 3 hours. It's quite nice to be here. And actually, I think I mentioned to you in the past that the mask culture here, while not perfect, I feel is actually still better than in the UK.
Having traveled to Germany recently, I think the British mask culture is probably a little bit more libertarian, bit more relaxed than a lot of the continent as well. And how does it, just so I understand, so you're a trustee at the American University in Cairo. Are you on campus at the moment? Do they sort of find a place, or do you stay nearby?
Well, I am on campus at the moment. It's a 288-acre campus with, 180 acres of landscape gardens. It's quite beautiful. And classes are not officially in session. We have about 7% of classes now in session. I have many places to stay in Egypt, friends, empty houses, empty apartments of friends who live elsewhere. But this is a place with great Wi-Fi, great tech support if I need it, lots of open space, and a nice guest apartment that is available to trustees. I thought it'd be a good place to work, actually, and that has been proving true.
Yeah, that sounds like it. Can I ask? So, can we start by talking a bit about your career so far? And the first thing that strikes me about it is, so you've done all sorts of things in the finance industry, but you studied Arabic as an undergraduate. Why did you study Arabic? What was the decision there?
I graduated from high school in 1988. And it was sort of peak Cold War. And I was very interested in that and in going into government and diplomacy. And so I started as a Russian area studies major. And midway through my freshman year in college, the Cold War ended. And so
career prospects declined.
Yeah. And I was taking, a number of Russian and Russian literature and Russian history courses, and also one comparative politics class. And that was a contemporary Middle East politics class. And I realized that I enjoyed that class more than all of the others combined. And so as I was watching, yes, my career prospects decline, as you said, precipitously, I thought that I would take Arabic, and I took Russian and Arabic for a year together, and then I decided that was way too difficult. So then I just switched to Arabic.
Yeah,
and that is why. Yeah, and it's a fascinating region, of course. It's a complicated region where risk is, of course, ever present, but also solutions just not yet found.
You said it was a contemporary Middle Eastern studies class that caught your attention. Did you envisage the Middle East playing the role that it has over the last four decades or 3 decades in global geopolitics? I mean, did you understand that at the time?
Yeah, I think so. This is the now late 80s, early 90s. The Middle East was already playing a huge role in oil politics. Of course, we'd had the Arab oil embargo, the Saudi flooding of the market. I mean, this is what the Middle East or the Arab world was known for at the time. It hadn't become, of course, the exporter of terrorism. And I say exporter because, of course, the Beirut hostage crisis was in 1982. There were a number of things that had happened, of course, in the region, but the exporting of it, I don't think anyone, well, certainly not I didn't predict that.
And it would be good when we talk about the energy industry in the long term, it might be good to pick up what role you see for Saudi Arabia and OPEC more broadly then. But before we get to that, another question about your career. So you were spending a lot of time, I mean, your focus was on spending investors' money to buy publicly traded stocks. In a sense, that's my simplistic description of your role before your current one. But then you moved into the advisory side, so investment banking, advising executives on acquisitions and strategy. Could you say a little bit about the motivation for that decision? And could you also say a bit about it? To me, at least from the outside, it feels like a fairly male-dominated profession in investment banking. What it was like moving across into a reasonably male-dominated world of investment banking.
Sure. Well, first, I had a quite varied career in finance. It wasn't a straight line from Middle East history and Arabic to banking in the first place. And by the time I became an investor, I had been a commercial banker. I had been for a few years a sell-side research analyst, not in energy, by the way, in consumer products. And then I spent, well over a decade as an investor. It's a wonderful job, by the way. It is, it's of course very intellectually demanding. It is, you're constantly learning new things. I would say that in general about most finance jobs, including the one that I have today.
Meritocratic, presumably. It's a fairly easy metric to judge your performance.
Investing in particular, yes.
Yeah.
And as you rightly said, other people's money. But investing in particular, yes, it is. It should be in the best of cases. It's not always, but in the best of cases, if you're managing your own sleeve of money, then it is, of course, very easy to see how you're doing versus the index or whatever one's benchmark is. And I loved it. I loved putting the pieces together. I loved getting, an information advantage through relationships, and by that I don't mean MNPI, but I mean putting that sort of mosaic of what might make a good long-term investment together from tons of research, and that's both on the paper and human contact. I got a little beaten down from the last financial crisis, or the great financial crisis. That's part of it. But also, I was recruited to one of the large bulge bracket investment banks was looking for someone with really good relationships in the sector. And I spoke to a lot of chief executives chief executives of companies that I was investing in or had invested in or might invest in, chief executives that I'd built up relationships, good relationships over the period, and asked them what they thought. And every single one of them said to me, you can't do this fast enough. There's a real lack of strategic sense, generally speaking, among in the advisory profession of what companies, should do. And I was already having those conversations with companies, with managements. And the other thing I was looking for was to better understand how companies actually work, which one does not get a sense of as an investor. It's quite easy to be very critical as an investor, but you don't really have a sense of not just the internal politics, but the time that it takes to get a decision made, particularly at a publicly traded company. Obviously, I'm not talking about startups. Yeah.
Could you just say a bit? You said sort of there was a lack of the strategic focus within investment banking. What was being rewarded in investment banking, a decade ago? And doing deals is sort of the I suppose the currency of investment banking. But what were people focusing on, if not strategic advice for the C-suite?
Well, doing deals is how most investment bankers get paid, or certainly advisory bankers get paid. And also, as banks over the last several decades, moved into investment banking. So traditionally it was merchant banks or independent investment banks, like the one I work at now, which is not tied to a balance sheet. We do not lend money, a number of things. But as banks moved into the business, they not only had a mandate to get pure advisory revenues, but also to sell the breadth of their products. So to make sure that if there's a bond deal, they're on it, and if there's an equity deal, they're on it, and if there's a big foreign exchange trade, they're on it and getting paid for that. And that removed a lot of the independence of the advisor, because there is a real imperative to push a product. I understand from a multinational or money center bank why that is an imperative. It's their business. That's how they make money. But it doesn't mean that it's always the right thing for the client.
Mm-hmm. And do you think, sort of fast forward 20 years from now, it looks like PJT is having phenomenal success, reasonably new company. Do you think you will see more of this movement away to sort of independent specialist advisors and away from sort of big sort of all singing, all dancing, big balance sheet investment banks in this advisory space?
Well, we're seeing it, certainly. The independent or boutiques, I don't call us a boutique anymore because we're about 750 people, but the independent firms are taking significant market share away from the large banks. And for that very reason, if you're a chief executive of a multi-billion, triple-digit billion company, or no matter how big your company is, frankly, you can listen to 20 other banks tell you all day long the laundry list, or the I call it the menu of things. Pick from the menu of things that you can do that will make me some money.
Yeah.
those are a dime a dozen.
Mhm.
But people that will tell you no, don't do something, or don't pay this much, or actually pay more because this is worth spending money on and it will be a game changer for your company, 10, 20 years from now. I do think that that's where the business is headed, because that's where the value is. We make high fees, but we should make high fees for a reason.
Yeah, creating value or something like that. Can you say the other question was about sort of, being a woman in a male dominated industry, and I mean my outside in view is that investment banking is more male dominated than almost all other areas of finance. Did you see gender as an impediment to making the transition?
Well, I didn't see it at the time. I had come from investing, which I already thought was pretty thin on the ground with women. And yet, in retrospect, it was chock full of them. When I got to investment banking, I was shocked at how few women were in the profession. It was astonishing to me. At one point, I was one of 90 one woman out of 90 or 89 other men managing directors in Morgan Stanley European Investment Bank.
Wow.
Yeah. Most of the time I was one of two, by the way. So
Okay.
Most of the time it was 100% better than that.
Double the representation.
Yeah. But still pretty bad. And it's really radicalized me, because, you asked this question, why is any industry male dominated? Because many are certainly many where there's a lot of money on the table. And I always ask men who tell me, well, why women don't apply? I said, well, why do you think that is? Do you think women don't want to make money? Well, no. Well, well, I don't think that's true either. So it's an industry where you show up on campus to recruit, for example, and if there's 8 white guys that show up on a campus, and there's an audience of 100 students at Imperial College, let's say, and there's a bunch of women, and they look up and they just see a sea of men, almost exclusively white, if not exclusively white. What is in it for them? And I can say also, as a junior woman, to look up and see that there are no women in the field, it's really demoralizing. And even for me at Morgan Stanley, I was a senior woman, and it was really demoralizing to look up and see no one.
Interesting. Yeah.
But I don't think it's a bad industry for women. That's a different question.
It sounds as though what you're saying is probably one of the bigger impediments is at the very start. Is that right? In the sense that if it's not a bad industry for women, and if once you're in, that you don't feel that, except in sort of the representation. Do you think that's the big? Obviously these are multifaceted problems, but do you think one of the big hurdles is sort of getting the right people to turn up in the first place and apply?
Yeah, you're right, John. We could have an entire series of podcasts on this one question. But we have made a very concerted effort to bring in at least 50% women in our incoming analyst classes, and we don't bring in MBAs at PJT. So that's where we can really make a difference in recruiting.
Yeah.
And in general, as I said, I don't think it's a bad industry for women. It is an industry that, especially at the junior levels, is very time demanding and less flexible than many other fields, even in finance. So, for example, investing has its own inflexibility around earnings season 4 times a year, around the stock market trading hours. But other than that, you can generally go to your cousin's wedding, and attend it if it's happening on a weekend, for example, and not worry that you're going to be called back to the office. And investment banking historically has run on tight deadlines. You're very aware of that yourself. And so that, I think a lot of people have just kind of called bullshit on it over the years. I wonder, frankly, I'm not sure that our clients are demanding, and of course, things have deadlines for a reason, but the business can be organized in a way that is more flexible, I believe. And certainly as one becomes more senior, I think my time is much more flexible than it was as an investor. I don't get 3 a.m. calls saying, a stock I own is down 7%. What do I want to do?
Yeah.
I don't have my life revolve around earnings calls. Yeah. So as a senior person, it's much more flexible, and of course now with COVID, it's quite different, but in that everyone's at home. But as a senior person, you can do a lot of things on the phone, on the road, at home.
Yeah, interesting. You're right. It's to some extent, it's a shame on this podcast. We try to discuss broader issues, but you could have a whole series of podcasts. But it sounds like, particularly in the finance industry, I tend to talk about gender in the energy industry, which isn't great. But it sounds like investment banking in particular has a bigger problem as well. So I will shelve that for now, but it may be a topic of a future podcast.
I want to say one more thing though. Increasingly, my clients are women. Mm-hmm. So increasingly, not just mine, obviously everyone's. The CFO of GE is a woman. You recently interviewed the former chairwoman of PG&E. Yeah. This is the last CFO of GE, for example, also a woman. So that is increasingly the case, and they notice when a group comes to see them and there's no diversity in the audience or in the room. This is encouraging for me also to see that other industries, frankly, are changing faster than my own. It's discouraging that my industry isn't changing as fast. It's encouraging to see others are. And just as a point, my firm, 50% of our senior management are women. Our managing partner is a woman. Our chief financial officer is a woman. Our chief operating officer is a woman. It makes a huge difference at company meetings, at partner meetings when most of the people speaking are women. We have a bunch of female partners. I mean, my firm is quite unique in this, but that is a very big difference. I think today versus 10 years ago.
It's easy for me to say as a white male, but I'm an optimist on the rate of change. I mean, I entirely understand that there is an impatience about the speed of change, but these things do take some time. Anna Borg became the CEO of Vattenfall a couple of weeks ago. Just since Aurora's existed the last 7 years, the level of female representation on boards and in the C-suite has gone up substantially, which means, okay, not next year or the year after, but I think 5-10 years hence, the world will look very different to the way it looked 5 or 10 years ago. So I'm an optimist, but we will see.
I am too. You know that old saying, science advances one funeral at a time.
Yeah, exactly. Good. Okay, I won't go any deeper into that one, but we should talk about the energy sector as well. So just a few things on your energy sector roles. So as I mentioned before, you're on the board of EDP, which is Portugal's biggest utility, and frankly, pretty big globally, right? I think bigger revenues outside Portugal than inside Portugal.
That's true.
How does that role inform? So sitting on the board of EDP, presumably you've got 10 or 12 board meetings a year, and you're seeing the internal machinations of an energy company. How does that impact the way you perform your day job advising executives, board members in other energy organizations?
Well, I think it goes back to my previous comments about understanding how companies actually work. And as an outsider, whether an investor or an investment banker, one's constantly on the outside looking in instead of on the inside looking out. And so I just have I got a much better appreciation for how companies work going from investing to advisory. and that probably doubled or quadrupled my vocabulary again, joining the board or the boards of a few companies. And these companies are very different. They're very different in domicile, in size, of course, obviously in end market, in stakeholder management. One is regulated by the Portuguese government, and then also has this broad empire, let's say, stretching from Brazil, which requires Brazilian regulation, to the U.S., which is 50% of our revenue, 50% of our business in the form of renewables, as you know, and many other countries. And one principally operates in Malaysia and the North Sea, and of course has regulation, but that's mostly safety and not price or income regulation.
Mm. If there was one thing that was in the CEO's job description that you sort of, before you talked about some things don't move as quickly and they're more complicated once you see the inside, and as an investor you just see the profit and loss or whatever it is. What's the aspect of the CEO's role that surprised you the most in terms of the difficulties involved once you got onto the board of EDP?
Well, EDP is a incredibly high-performing organization, and it is an organization where everyone, whether they're in Brazil or the U.S. or Portugal or Greece or anywhere else we operate, I think is rowing the same oar. It's also a company with a great ethos and mission. We're one of the world's largest renewables developers and have been for a long time. And so, and it also has the benefit of being the biggest company in the country. And that attracts incredible talent. You can't disassociate the two. As it relates to the board, I think, the board of any company should be diverse. Our board is quite large. We have a number of stakeholders, quite important ones, quite unusual ones in our case. We have a Chinese state-owned enterprise, China Three Gorges. We have Mubadala from Abu Dhabi. We have Sonatrach from Algeria. We have a Spanish family that's a historical utilities investor. And then you've got all of the independent directors like me, although none of them are like me, of course, because obviously everyone's different, but we have a number of former ministers. It's just quite a range. And so I think, being able to build consensus while also doing one's day job as a leader is quite a difficult balancing act at a company that big and that political. Utilities, as you know, by their nature are quite political. Yeah.
The state has a big role to play. Yeah. Okay. That's interesting and not surprising in a sense. And I should say, I've spent time with EDP. To your point of the biggest company and a talent magnet, it does feel. I've been in Houston with EDP. I've been in Lisbon with EDP. It does feel a bit more like an investment bank than a utility in a sense, or sort of Jack Welch type GE culture rather than a sort of state-owned enterprise. So I wholeheartedly agree. Just zooming out a little bit, what does and you spend a lot of time with a lot of leaders in the energy space. What does good leadership look like in the energy industry at the moment?
Here, I guess I think of, and in any industry, by the way, it's not unique to energy. The old Wayne Gretzky line, I skate to where the puck is going. That's how I win. That's how I score goals. And in the energy industry, the life cycle of an investment, certainly historically, maybe less so today, but certainly historically, it's been 40, 50 years. And having someone in a leadership position that can, spot where the industry will be in 20 or 30 years and position, one of these big sort of historically, super tanker, difficult to move companies is very important. And what I would say is leadership in our industry almost always looks like someone from another industry. And here, just, coming to mind, Ignacio Galan came from the telecom industry.
Yeah.
Patty Poppy of CMS came from GM, the auto industry. Francesco Starace comes from outside the industry, even if he's been in the industry for a long time. And increasingly, I think, maybe this is obviously very common in disrupted industries. Transformation is very hard in any industry, but increasingly, I think it does take somebody from the outside to be able to change something.
Predicting the future is really hard, right? It's sort of skating to where the puck is going to be. Is there, and I suppose, this last decade in the power sector, there have been people who kept doing what they were doing 20 years ago didn't fare very well in general, whether that was, investment in expensive offshore oil, or whether that was, coal generation in Europe, or those types of things. Is there a lower bar than predicting the future? So what I'm thinking is is that to say that you would put less of a premium on, adaptability, placing short-term bets, placing resilient short-term bets that you can change very quickly? In a sense, if you can't be guaranteed you're going to be right, are you, in this day and age, given we're going through an energy transition, better off making reversible short-term bets rather than long-term ones, do you think, as an executive at the moment? Or is there no way of getting around the fact that you need to be building long-term infrastructure, and you just have to be right about the future?
It's a good question. There are certain inexorable trends, I think, that you cannot ignore.
Mm-hmm.
The cost curve of renewables cannot be ignored. For example, the ESG movement, I don't believe, will be short-lived.
Yeah.
Our planet is burning. It's taken, by the way, a long time to get some consensus around that. It's not as if it happened overnight. One had plenty of time to get on that bandwagon.
Yeah.
Can you place small bets? I don't know. Can you place a small bet on hydrogen? Maybe, for example. But I think it's going to be quite capital intensive to do so. Could you place a small bet on a new retail business model? Yes, probably. I think it depends on the capital intensity, basically.
Yeah, offshore wind. And I suppose the people that placed the small bets on offshore wind didn't last long. The guys that placed the big ones did spectacularly well. As another example, maybe hydrogen things like that.
Although Eon and RWE are both examples of companies that I would say initially placed small bets. It turned out that they were very early, and so those small bets became meaningful. RWE is an excellent example of a company that is led by industry people. It's one of the few, frankly, that has, by hook or by crook, this company has completely transformed. I mean, we'll really know in 5-10 years, but it's almost magical what they've done. I mean, if you had told me, if I closed my eyes 10 years ago and you told me that RWE would be a renewable leader, or on their way to being one, I would have just laughed you off the phone.
Yeah, even 5 probably. Yeah, there's a bunch of small bets. They got a lot of offshore sort of optionality, I suppose, in their portfolio. Resolve the nuclear
issue so impressive
in Germany. Yeah, you mentioned the ESG movement. Just a more specific question on that. How is the ESG movement shifting the M&A market at the moment? And is it, we see it, I think, in cost of capital in public markets and these types of things. But in terms of M&A, how's this impacting things at the moment?
First and foremost, just look at the multiple premiums investors are placing on some of these companies. Look at on the equipment side, Vestas and Siemens Gamesa. I mean, both of those companies have doubled over the last year. Vestas is up, I don't know, like 1,000% in the last 8 years or something. Look at the multiples being put on or assigned to an EDPR or an Ørsted, both of whom are executing well, by the way, but things haven't radically changed internally at either of those companies in the last 3 to 5 years, let's say. I mean, Ørsted is a separate topic that I think we should actually cover, but just what investors are willing to ascribe changes the way a company would think, certainly in our sector, about allocating capital, about buying something in. What should one pay for it? And then, so that's one side of it. And then also, maybe it's time to sell, for example. And obviously, Ørsted, EDPR, we have a sort of an asset rotation thing, which is sort of build and sell, which maximizes our development expertise, but also maximizes our profit on the other side. So that's a big part of M&A now. And then on the other end, you've got big oil, a company like BP that says they want to have 50 gigawatts in this decade, on a base of, what is it, 2.5? I mean, I don't understand how they could do that organically. And that is just one big, potentially M&A tail. However they do it, it might not be buying renewables directly. It might be some other way, but that has a big impact.
Yeah, you'd have to assume very difficult to develop that volume of renewables internally with your current capabilities. So is that, if I were to, so there's two things going on there, at least as I put it simply. There is, yes, investing in ESG has been a wonderful thing to do, particularly renewable space over the last 5 years, undoubtedly in most jurisdictions. And then there's a second bit, which is it appears to be looking to the future. The premium ascribed to, decarbonisation in whatever form it is still pretty high and foreshadows a lot more growth and a lot more value in that space. Are you saying you think maybe that premium is too high at the moment? I mean, it is very high, but yeah, do you think it might be too high, which explains the asset rotation for EDPR and these types of things?
There is still so much room to grow, as you know. I mean, renewables penetration is as much as it has expanded in the last 20 years, it is
we're not
still
scratching the surface of what we need to do.
Exactly. And what we can do, and frankly, what we will do. I mean, the cost curve is just undeniable. I mean, I've been having this conversation for a long time. And then there's the whole likely prospect of, quote, overbuild, which I don't even think is really contemplated by most investors. Yeah, I don't even think you have to contemplate it yet.
Yeah,
this idea that we might overbuild, or build up massive solar installations in Arizona and ship it across the country, or in the south of Spain and ship it to Germany. That doesn't feel fully baked in.
The energy sector is highly political, and even something like renewables or network investment, actually there's a bit of a political risk premium that's going to be built in over the next 10 or 20 years because of government's role in building these things out. As a board member, do you think the political risk premium will grow for in the power sector, in the renewable space, as the energy transition progresses?
I mean, politics and policy matter so much in this sector. I mean, as an investor, I used to say it was sort of 50% of the game. Getting that right, having good regulatory relationships, if you're regulated, having great policy if that drives some of your income and your growth. I mean, these things, I think, can't be overstated. Certainly, at certain periods in a life cycle, and if you're regulated, politics will always matter.
Mm.
It never doesn't matter. And being a good corporate citizen and being good for stakeholders broadly is people that have managed that really well, or companies that have managed that really well. And here again, Excel in the U.S., CMS in the U.S., Iberdrola to a large extent in Iberia, they are rewarded for it.
Yeah.
It's a maybe it's too close a relationship sometimes in some cases, but also it's a regulated monopoly. We want them to have a good symbiotic relationship at least.
Yeah, well, they should be rewarded if they're satisfying the public's needs, in a sense, and proximity to politics is probably helpful for understanding those. You talked about Ørsted, and it would be good to pick Ørsted up again as a case study. Do you think so? Big oil, I suppose, oil markets are far more deregulated than the electricity system. What do you think of big oil's ability to pivot towards big renewables? You talked about BP and the difficulty in developing the sort of pipeline they want to do. We've had a bunch of big oil and gas companies come out and say we're going to go net zero by 2050. I think Equinor did it recently, or in the last week or so. What do you think of big oil's ability to play in the renewable space and in the net zero space over the next 20 years? Do you think they will all be net zero by 2050?
The oil companies?
Yeah.
By 2050? Well, I think there will have to be. So, again, by hook or by crook, yes.
Yeah, they may not exist, but
yeah, how much oil are we going to be using exactly in 2050? Look, transformation is hard in any industry. I mean, this is not unique to the energy sector at all. When an industry is disrupted, and certainly renewables are one of the great disruptors of our industry, but in any industry, it's one of the greats. Ørsted managed to do it superbly. Obviously it used to be called Dong. It was the Danish oil and natural gas company. Ørsted was owned by the government. And that sort of cocooned them, protected them from angry shareholders who probably certainly wouldn't have seen the vision paying off, the vision of switching from a fossil fuel company to a renewable developer. And I feel strongly that had they tried to do as much as they did, as fast as they did it, with a normal shareholder base, it would have been very difficult, if not impossible at the time. I don't want to minimize what has been an incredibly successful transformation, but they did have the benefit of being, protected. So most of these big oil companies don't have that. Equinor does in their ownership structure. So that's one. So, and then you have to ask, I think, because they don't have it, are their shareholders and stakeholders broadly going to be patient? Is there someone at some point, as BP is falling quite precipitously, that steps in and says, you know what, we're going to scrap this strategy and I'm going to run it for cash? Because that's much more valuable than your admirable, but bad for shareholder strategy. And there will be a point probably where that could happen, and whether they'll be protected just by virtue of how big the asset base is and the liabilities, who knows? But I think it's going to be very hard for them. And also, I really admire Bernard Looney. And what he's doing, he's taken some very unpopular decisions with most. Some would say quite risky. Maybe the bigger risk is to do nothing. But he has distinguished himself in his industry by taking some very hard decisions and putting up some very ambitious goalposts. And for that, he should. It is admirable.
So it sounds, state cocoon is helpful and very difficult for a publicly listed company. The whole, milk it for cash argument, I think that's a lot, as someone who runs a business, I think that's a lot harder to do than to say. In a sense, I've seen, on a smaller scale, Centrica, maybe the argument in the UK was, you've got this legacy set of customers. Let's try not to be too ambitious with our strategy. We've got some high profit customers. Let's just kind of, keep it simple and stay profitable. But, it goes to the culture of the business. If you are milking an oil and gas company for oil revenues, it becomes harder to retain talent. It becomes harder to motivate employees. It just, all of these kind of soft things that when your company is growing and being perceived to be playing a really important role in the energy transition aren't the case. I just think make it a lot harder than it is on, say, an equities analyst spreadsheet. In general would be my take. So we'll see how it goes if there are some that decide to be the cash cows in due course because their investors get upset about returns on renewables and things like that. But that's one I'll be looking out for.
Yeah, sorry. I mean, in the UK, John, one person near and dear to both of us executed this flawlessly, but wasn't rewarded. So that's Dorothy Thompson. She's now the chair at Tullow Oil, but she was the CEO of Drax, which, as you know, was one giant coal-fired power station. And she transformed it from a coal-fired power station, quite a big one, into a biomass company. Yeah.
Well, you say not rewarded. I mean, and you're right. If you look at the share price, I think you're right. And then if Dorothy's willing, it's probably worth inviting her on to speak more to this. But it depends where you draw the line, right? I mean, most coal power stations are shut now, right? And Drax, as a pure play coal generator, would not exist now had it not switched to biomass and got government behind it. So at least by my reckoning, it was a phenomenal success. It's just that the base that she was working off was the extinction, I suppose, in my take on that history.
It's an excellent point. It is a going concern, and so it still employs lots of people. It's still a listed company. It's still providing jobs in the region. Absolutely, from a stakeholder perspective, certainly from the employee perspective, and the company still existing perspective, absolutely a success. No question. No. Could the cash flow have been put to different or higher use? Possibly. Did some of the government decisions fall, well and then badly?
Definitely.
Yes. Yeah. Would shareholders have allowed the capital to have been put to a different use? Maybe not. I mean, many shareholders will just say, look, I don't want the company to decide. I'm not investing in a company like Drax, for example. I'm just picking on Drax, or even in BP, for BP to decide what they should do with the cash flow. I would rather take the cash as a shareholder through dividends or through share price appreciation and invest it in something else, because these transformations are very difficult.
Yeah. We do. It is exciting times at Drax. We do have Will Gardner coming on the show in the next month or two, and we will get into what they're doing around negative emissions technologies, among other topics. Just one more point on the that may be related point, depending on your perspective, and it comes full circle, which is Saudi. So obviously there's Aramco, but I'm talking about the country. What does Saudi Arabia, as an expert in this part of the world, as an expert in the energy system, what does Saudi Arabia look like in 2050 in your mind?
Wow. Well, first I should say that I'm not an expert on the Arabian Gulf, but so having said that, I'll obviously offer an opinion. This part of the world has a real problem, which is they are oil dependent states. Obviously, that's mostly true of it's not really true of Egypt, for example, or much of the Levant, et cetera, but it is true of the Arabian Gulf. And they have been diversifying, I think, as fast as they can, but it will never be fast enough. And I think they're in for a very difficult transition and a lot of painful budget cuts for the foreseeable future. And in fact, in many ways, the way they've been diversifying has been through investing and not through hard assets. I'm not suggesting that the Kingdom of Saudi Arabia would find it easy to attract, I don't know, the semiconductor industry or something, to their country. By the way, there's a lot of cultural issues, not just for foreigners to come into the country, but also for locals in terms of work and workplace culture, et cetera, to be overcome. Mm-hmm. And how fast they can do that will be the true test. Now, they may, I think, very likely be forced to do that. There will be a reckoning as, if oil continues to slide, broadly speaking, I do believe will be the case.
Yeah. I suppose it's the flip side of the multi-decade energy transition is that fossil fuels are increasingly marginalized. Interesting that Saudi Arabia's semiconductor industry may be better off located in the US than in Saudi Arabia. Seems to make a lot of logical sense. Great. That's a good time to move on to. I've got a series of underrated, overrated questions here. Best type of answer, Laurie, is just a one-word answer. So I've got 4 concepts in the energy transition. Keen to hear whether you think they are overrated or underrated. So the first one is regulated assets as a safe investment. So I'm thinking about network, probably like canonical example is like networks, gas pipelines, power transmission lines. Do you think they are overrated or underrated as safe investments?
Overrated.
Okay. Very good. I won't go into the detail, but interesting to hear that. International utilities, so ones that operate in multiple jurisdictions, say 10 plus jurisdictions, which is obviously a change from the way utilities have tended to operate in the past, where they'd be in one or two markets. Do you think international utilities are overrated or underrated?
Okay, for different reasons, regulated international utilities, overrated.
Yeah.
Things like renewables developers globally, underrated.
Okay. Interesting. Good. The third concept, the role of markets in driving decarbonisation. I'm thinking predominantly the power market, prices for power every half hour to determine what happens, who invests and what dispatches. Do you think the role of markets in driving decarbonisation, I suppose carbon prices is another example, do you think they're overrated or underrated?
Underrated.
Okay. I thought you would go in the other direction, Laurie, based on some of our previous conversations. So I'm heartened a little bit to hear that.
Well, we're talking about markets and policy. I mean, it's hard to separate the two. I would just say, I think, broadly speaking, policy is underrated.
Yeah.
At the beginning of a life cycle, and it is overrated, in the back end.
Yeah. Entirely understand. Good. Final one, the role of the chief executive in driving company performance over the long term. Do you think it's overrated or under, the top CEOs lucky, or were they good?
Yeah, I feel the most strongly about this one, and that is absolutely underrated.
Okay. So CEO is vital for driving company performance over the long run.
There are so few truly great chief executives in any industry, truly high quality executives.
Interesting.
And they make such a difference.
Interesting. That's a topic I'd love to pick up at some point, maybe on a future podcast or something else. What makes a great CEO? But I will conclude it there. So it's a natural time to finish. Thanks so much for sharing your expertise and your time, Laurie. I hope you have a lovely time in Cairo. So Laurie Fitch, thanks so much for taking the time to speak.
Such a pleasure. Thanks for having me, John.
That was Aurora's CEO and co-founder, John Feddersen, talking to Laurie Fitch, partner in the Strategic Advisory Group at PJT Partners. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to subscribe on whatever platform you use. Thanks for listening and goodbye.